Good afternoon, and thank you for joining us to discuss FalconStor Software's Q2 2020 earnings. Todd Brooks, FalconStor's Chief Executive Officer, and Brad Wolf, Chief Financial Officer, will discuss the company's results and activities, and will then open the call to your questions. The company would like to advise all participants that today's discussion may contain what some consider forward-looking statements. These forward-looking statements involve risks and uncertainties that could cause actual results to differ materially from the forward-looking statements. These risks and uncertainties are discussed in FalconStor's reports on Forms 10-K, 10-Q, and other reports filed with the Securities and Exchange Commission and in the company's press release issued today. During today's call, there will be discussions that include non-GAAP results. A reconciliation of the non-GAAP results to GAAP has been posted on FalconStor's website at www.falconstor.com under Investor Relations. After the close of business today, FalconStor released its Q2 2020 earnings. Copies of the earnings release and supplemental financial information are available on FalconStor's website at www.falconstor.com. I'm now pleased to turn the call over to Todd Brooks.
All right, well, thank you, Clark. I appreciate that. And I'd also like to thank everyone for taking your time to participate in our call today. As we've reviewed during our last two earnings calls, we implemented 4 key strategic initiatives for 2020. First, on generating consistent growth by expanding our industry-leading long-term archive retention and reinstatement product line and creating new, flexible, and extensible data storage innovations that we believe will drive our growth over the next decade. And then second, on increasing our commercial investment and focus to regions where we have demonstrated our ability to grow and our ability to win. And then third, on sharpening our commercial and R&D focus related to our business continuity-driven data replication products to ensure we are focused on those use cases which are important to our largest and most strategic enterprise customers. And then finally, on delivering consistent operating profitability. Our strategic focus as a result, and obviously then our resulting set of products, are pointed at a market which has been reported by verified market research to be currently sized at approximately $62.8 billion and predicted to grow at a compounded annual growth rate of 15.5% through 2026. This growth is being driven by 3 factors. First, on an explosion of the raw amount of data being generated by various digital technologies. And then second, on dramatic increase in innovative data storage options, whether they be located in a traditional data center, a private cloud, or a public cloud. And then finally, on the ever-expanding need to retain data for lengthy periods of time to ensure legal and regulatory compliance. This dramatic growth in the capacity of data captured and stored is driving the need for enterprises to cost-effectively, securely, and intelligently manage this data, perhaps in ways that they've never had to contemplate managing this type of data in the past. In fact, according to IDC, up to 75% of data managed by an enterprise is directly related to routine data archive. Our technology allows an enterprise to leverage existing archive policies and procedures while ensuring the most stringent archive windows are met. Data storage capacity is reduced by up to 95%, and cloud object storage alternatives such as Wasabi, AWS, the Hitachi Content Platform or HCP, Microsoft Azure, Google Cloud, and IBM COS are available for improved data storage efficiency. I continue to be very excited about this market and the business value that we at FalconStor deliver to our complex enterprise customers. For the balance of today's call, we will elaborate on each of these key strategic initiatives and provide a detailed review of our Q2 financial results. Finally, we'll open the phone line for any questions you may have. If you would like to ask questions, please use the question area within the webinar panel to enter your question. And then once we open the phone lines, we'll be happy to call upon you to ask your question live. So with that, let's dive into some of the Q2 result highlights. The global COVID pandemic, continues to be at the top of our minds as our thoughts go out to everyone that's been impacted by its spread. The safety of our employees has been at the top of our mind. It's been one of our top priorities, as is ensuring that we're delivering outstanding value to our global customers and partners. Despite the uncertainty and the disruptions caused by COVID-19, we are very encouraged by the strong operating performance that we had in Q2. First, during the quarter, we generated an 11.5% year-over-year increase in our global sales bookings. This increase was driven by a 251% increase in new customer bookings within our core markets of the Americas, EMEA, Southeast Asia, Korea, and Japan. New customer wins in the Americas and EMEA were especially strong, and the majority of our global wins were within the healthcare, technology, and financial services industries. Second, then, despite our strong sales bookings results and growth, total recognized GAAP revenue actually declined year-over-year by 12.5%, and that was primarily driven by a decline in recurring maintenance revenue in our non-core markets, which include China. Over the next several quarters, we do expect our core market results, I should say, to begin producing global revenue year-over-year increases as our non-core market revenue is strategically replaced. Third, then, the decisions that we made back at the beginning of the quarter to implement a proactive expense reduction plan to hedge against potential COVID-19 business disruptions, combined then with our strong sales bookings, allowed us to generate $407,000 in GAAP net income during the quarter, which was a 134.7% year-over-year increase. Fourthly, then, during the quarter, we also secured our first StorSafe customer. StorSafe, which we launched back at the beginning of the quarter, is our newest patent-pending long-term archive retention and reinstatement product, which leverages the power and simplicity of industry-standard container technology to enable persistent long-term archive storage. StorSafe dramatically improves archive data portability, accessibility, security, and integrity validation, especially as it relates to multi-cloud data storage leverage. We believe this will create game-changing capability that solves age-old challenges in data usability and portability, resulting in a full spectrum of archive data storage options available to our enterprise customers to efficiently utilize essentially any storage environment, while confidently ensuring that data security and efficient archive access. Finally, then, we ended the quarter with a $500,000 increase in our cash position compared to the end of Q1 2020. So all in all, I am very pleased with the results our team produced in Q2. And with the support and the encouragement and the engagement, I should say, we are seeing with our global partner network. I'm also excited by the customer and industry analyst response to our innovative StorSafe solution, which is driving strong demand, strong new demand for FalconStor products. So despite our strong performance in Q2, we realize that we've got to keep a very close eye out for any disruptions that are being caused or that could potentially be caused for us and our customers by COVID-19. Just a few points on what we're seeing as it relates to COVID-19 impacts. First, to help protect the health of our employees and their families, we continue to ask the majority of them to work from home, and we'll continue to do that for the foreseeable future. Second, unfortunately, despite the disruption that many industries are experiencing, our customer and partner base continue to invest in the business critical area of enterprise data protection, in which we target our solutions, especially within verticals such as financial services, healthcare, and technology. Third, then, here again, fortunately, our Q3 pipeline continues to be strong despite the COVID disruptions. And in fact, our results from July were very strong, and we continue to be encouraged by what we're seeing. Nonetheless, we realize that future commercial delays are certainly possible as a result of COVID, as companies around the world continue to deal with prolonged impacts. And so we'll keep our eyes open, and we'll make sure that we'll adjust any operating plans as necessary so that we can continue to deliver positive results. I mentioned that our customers and our partners are continuing to invest in this area of data protection. And I think one of the reasons that we've had strong results is because of the products that we have and the segments within data protection that they play. And so, as you might remember, our products are utilized by enterprises and managed service providers across the globe, and they address two key areas of enterprise data protection. First, long-term archive retention and reinstatement, and then secondly, business continuity-driven data replication. Our products are software defined, which means that our technology allows our solutions to be hardware, cloud, and source data agnostic, giving our customers maximum leverage of existing hardware and software investments. Our innovative integration into modern cloud-based technologies enables our customers to dramatically improve the portability, security, and accessibility of their enterprise data. This accessibility is key in our modern world, where data is not only protected, but also intelligently leveraged to facilitate learning, to improve product design, and to drive competitive advantage. Within then the long-term archive retention and reinstatement segment, we've traditionally sold our FalconStor VTL or virtual tape library solution, and are now actively marketing our next generation long-term archive product called StorSafe, which I mentioned earlier. Both of these products deliver innovations that enable our customers to modernize their archive operation and infrastructure and dramatically reduce their archive data storage costs while improving archive security, portability, and accessibility. We filed patents on these innovations, and we believe they can transform historic challenges in archive storage and data management. Second, then, within our business continuity driven data replication segment, our core products are our network storage server or NSS solution and our continuous data protection or CDP solution. Traditionally, these solutions have been available as standalone products or could be licensed together via our broader software platform. These products enable our enterprise customers to achieve superior recovery point and recovery time objectives while optimizing storage hardware investments through advanced storage virtualization. So we'll continue placing our focus within these two product segments for the foreseeable future. As I mentioned earlier, our first key 2020 strategic initiative has been to expand our industry-leading long-term archive retention and reinstatement product line by creating flexible and extensible data storage innovations to drive our growth over the next decade. As part of this initiative, we have expanded our targeted go-to-market paths. These now include large enterprises with diverse technology platforms, including IBM I and Windows and Linux and others. Second, then on IBM Protect Tier replacement. Protect Tier has been end of life. Third, then on the Hitachi Content Platform, or HCP, storage replacement, or storage leverage, I should say. Fourth, then on the HPP or Cepaton replacement, which has also been end of life. Fifth, then on Dell EMC data domain upgrades. Sixth, on legacy tape modernization. And then finally, and one that I'm very excited about, helping cloud storage and MSP partners dramatically improve their data management capabilities. So these expanded go-to-market paths have proven effective, and we will continue to strategically focus in this area. Finally, and in summary, I mentioned this, I think in nearly every earnings call, but I'd like to again reiterate that FalconStor is very unique. Our 2 decades now of technology innovation is unmatched by newer entrants in the data protection space, and will continue to build upon this advantage. Our customers know that our solutions are powerful, that we provide one of the industry's most comprehensive set of solutions in this space, and that we are actively innovating to deliver capabilities that change the dynamics of archive storage management well into the future. So at this point, I'm going to turn it over to Brad to provide additional detail about our Q2 financial results. Brad?
Thank you, Todd. As Todd mentioned, during Q2, we delivered 11.5% year-over-year total billing growth, despite the economic turmoil caused by the global COVID-19 pandemic. We closed the 3 months ended June 30th, 2020, with $3.5 million GAAP revenue compared to $4 million for the same period of the previous year. Our software solutions play a key role in efficiently managing and protecting critical data for businesses around the world. And we're confident that as the global economy recovers, our sales momentum will recapture the momentum achieved through our recent sales successes in key strategic markets such as the Americas. As we move forward through the balance of the year, our energy will be concentrated on generating positive cash flow, capital preservation, strategic growth, and continued product innovation. GAAP total cost of revenue for the 3 months ended June 30th, 2020 decreased 69% to $0.4 million, compared with $1.3 million in the prior year period. Total gross profit increased $0.4 million, or 15%, to $3.1 million for the 3 months ended June 30th, 2020, compared with $2.7 million for the prior year period. Total gross margin increased to 89% for the 3 months ended June 30th, 2020, compared with 68% for the prior year period. The increase in our total gross margin and total gross profit in absolute dollars was primarily due to our cost reduction efforts and our decision to stop selling hardware. GAAP total operating expenses for Q2 of 2020 were $2.6 million compared to $3.7 million in Q2 2019. Again, as we said last quarter, due to the commercial uncertainty in late Q1, we developed and implemented an aggressive expense control plan. This plan reduced our annual cash expense run rate by approximately $4 million, or 29%, and resulted in the furlough of 21 employees. Due to the business returning to a more normal trajectory in Q2, we have brought 6 of the furloughed employees back to work as of August 5th, 2020. This conservative approach to expenses has enabled FalconStor to show significant margin improvements as the business ramps back up, and positive operating and net income. During the 3 months ended June 30th, 2020, we recorded a GAAP operating income of $0.6 million compared to a GAAP operating loss of $1 million for the prior year period. We recorded a GAAP net income of $407,000 for the current quarter compared to a GAAP net loss of $1.2 million for the prior year period. Turning now to the balance sheet, we ended the quarter with a cash balance of $1.5 million compared to $1.5 million at December 31st, 2019. Net working capital, excluding deferred revenue contracts receivable, but including the redemption value of our term notes, ended at a $2.7 million deficit. As we mentioned last quarter, we applied for the Payroll Protection Plan loan from the Small Business Administration and received $754,000 in May of 2020. We closed the quarter with $1.5 million of cash and cash equivalents, accounts receivable gross of any reserve of $2.1 million, accounts payable and accrued expenses of $3 million, and deferred revenue of $5.4 million. Our $1 million note payable to Hal Capital and ESW comes due in September 2020, and given our current billing momentum and strong accounts receivable growth, we plan to pay this off in full and not extend the loan. We also plan to apply for forgiveness for the Payroll Protection Plan loan from the Small Business Administration this quarter. Finally, we believe the financing commitments the company has in place and our aggressive expense control initiatives described above are sufficient for managing the uncertainty surrounding COVID-19. Todd, I'll turn it back over to you now for final comments.
All right, well, thank you, Brad. And in summary, our thoughts remain with everybody as they manage through the unprecedented impacts caused by COVID-19. We'll continue to do what is necessary on our part to protect our employees and successfully operate against our key strategic initiatives throughout 2020. All right, and then at this time, I'm going to ask Clark to begin the question and answer session. Clark, go ahead.
Yeah, thanks, Todd. I haven't noticed any questions answered yet, but if anybody has any questions following the presentation, if you would just type them into the little question pane in your dashboard, and we'll monitor that for a few minutes here, a few seconds.
Great. Yeah, let's give it 30 seconds or so, just in case a question comes to mind here real quick. Don't be shy, everyone. Feel free to submit a question if you have one.
Okay, still no questions, Todd.
All right. Well, we'll call it then. We'll, once again, folks, thank you very much for your time. We are obviously excited by the performance that we had in Q2 and by our performance thus far in Q3. And we look forward to reporting again here in 90 days or so. So with that, we hope everyone has a great week. And thanks again for attending our call today. Thank you.
Thank you.